CPI and retail sales figures show slight relief on consumer pockets. Joining us for a look at this from Cape Town is Managing Director at the Boston Consulting Group South Africa. That's Stefan Salzer. Stefan, thanks for your time today. I think let's start with CPI. We've seen that breach above 5% year on year in September. Do you agree that it is temporary?
Yes, I think from what we've seen in the market, you can see this trend picking up, and I think that the interpretation that you've been hearing in the market today is quite on the money in my view.
Two things that we've been watching quite closely are fuel. Obviously, we saw the petrol price increase, and there's one expected at the beginning of next month as well. Should we worry about the direction of fuel prices and the impact that that may have on inflation?
I think it will certainly have an impact on inflation, and it will also, if you think about the money that consumers have to spend, it will also impact the availability of funds for other purchases that we've seen the retail sector benefiting from what looks like fresh money that was in the market.
Absolutely, and I think let's also consider the fact that some people are penciling in the possibility of an interest rate cut in November. Some are saying potentially not. I wonder what that does to the pockets and the psyche of consumers then.
Well, it certainly will have an impact, just like the fuel prices will. And I think also this uncertainty that we're seeing in the market makes it really tough for retailers to manage their business, because they have to be prepared for a multitude of scenarios that might play out in front of them.
When you look at the increase that we saw in retail sales in the latest data print for August, do you get a sense that retailers have had to really sort of work very hard with promotions and cutting prices in order to get, the feet into the stores and getting consumers in to spend?
Yes, definitely. We've seen an uptick in promotional activity in the market throughout the year, and this is manifested in some detailed trends you can read into the statistics data when you unpack it below the headline 5.5% growth, which is indeed a very impressive number that took many by surprise.
If they are engaging in this promotional activity and also dropping prices, what would that do to their margins, though? And could we expect that retailers' performance, their own financial performance, might be under pressure?
I would think that it's not going to be a year of record profit announcements by all of the big retailers indeed.
We're heading towards the festive season. It's usually big spending time for South Africa. What sort of expectations should we have for consumers? Are they going to be more conservative?
My take from also looking at how this played out 12 months ago is that consumers will be lured into shops by an intensive battle of promotional activity. We've seen this in November last year, where Black Friday sales were at a level that was unprecedented in South Africa before. However, total money in the market will not necessarily increase, and I would expect it to play out a little bit like it did last year, where November sales were very promising, just to leave us finding a quite muted December, because everybody did spend their Christmas money 3 weeks earlier than they did in the past.
Absolutely. So just finally, digging into the data on the retail sales, it looks like all the categories saw positive growth, but we saw the highest annual growths in household furniture and appliances and equipment and things like that. What do we read into that trend?
I think this is actually a very interesting point in the statistics, and Stats SA publishes two sets of figures. They publish a set of figures that they call at constant prices, and that is to remove any effects that inflation might bring into the game. And then they show an effect, a growth rate at current prices, which is the price you actually pay at the till. And when you look at that sector specifically, or that subsector specifically, you see that while they managed to grow volumes, so they did manage to grow the size of the sector in constant prices, actually in current prices, so the money that goes through the till, they were quite stable. They were actually therefore showing something that we would call a deflationary effect in their pricing. So what they did was they reduced prices across the board, and they did see volume upticks from that. And for this sector as a whole, that was one of the key effects that we could see in the data, from most notably having driven this growth for them.
Oh.